Welcome, everybody. This is Buck Joffrey, and this is the Consensus Network. And today we are going to do part two of my interview with Teeka Tiwari. Now, this was what we called Crypto A to Z, but as you can imagine, having listened to the first part, it was more like Crypto A to M, and now we're going to go to N to Z. Make sure you listen in. We're going to talk about a lot of interesting topics. Specifically, we're going to talk about things that are known as ICOs. We're going to talk about the big banks' involvement and how that's growing and how ultimately this entire cryptocurrency goes mainstream with big institutional money. So when we come back, we'll go back to the interview with Teeka Tiwari and address all of this. Now, there isn't much more exciting than cryptocurrency, but there are old-fashioned ways of creating wealth outside of Wall Street that have been used by the wealthiest families in the world for generations. And that's what my other podcast is all about. It's called Wealth Formula Podcast. Now, if you've made a lot of money in crypto and don't know what to do next, this show might actually answer a lot of those questions too. Again, it's Wealth Formula Podcast with me, Buck Joffrey. One of the things I want to talk about, because, crypto or blockchain and everything around this is what I think is just amazing about this story right now is that there is so much hype and so much craziness. And one of the reasons I did this podcast is to try to emphasize the reality here, which is that this is an incredible technology that if you just look at it, all the hype, then you got people saying, hey, there's, these are tulips and all that stuff. ICOs have been one of the things that I think have created a lot of that negativity because of what, some of the fraudulent activity. Can you talk a little bit about what is an ICO in the first place and kind of the phenomena of that in the last year or two?
Sure. An ICO is short for initial coin offering, which is a play on the old IPO, initial public offering. And it's just the way that people have used to raise money. So instead of issuing stock, they issue cryptographic tokens. And I've said this now for more than 2 years. 85% of ICOs, in my opinion, are fraudulent. Mm-hmm. Just absolutely fraudulent. Of the other 15%, I would say 2% of those deals are real. And then the 13% that's left over, they're not bad people, but they're bad ideas and they'll fail. So, which is why I've never recommended ICOs in any of my newsletters or services, because quite frankly, there's too much risk. Something that we've done that's been really successful, and if you're interested in ICOs, is we wait till the ICO comes out and it crashes, because it always does. And they typically crash 80 to 90%. And then we start doing a deep dive and researching the idea. And if it's a legitimate idea and with a legitimate team, then we'll get involved. But I'm not a fan of ICOs. About $6 billion have been raised this year in ICOs, which is incredible. But in my opinion, most of that money will have disappeared in a year or two.
One of the things, though, conceptually, if you think about this idea of the initial coin offering, that, right now, it's, this is a tool for, primarily for cryptocurrencies and new projects, et cetera. But there's using this concept of cryptocurrency and raising money and all that is actually quite revolutionary, right? If you consider the opportunity out there, how was it that if you had a good idea and you have a great business, maybe if it's an established business, in order to go public, you've got to, pay these banks a ton of money, and you have, and then of course the people or the institutions that are investing it have got these, lockup periods of years and years without liquidity. To me, when I look at this concept of the ICO, it is I think to me it looks like an existential threat to investment banks and to venture capital. Do you think
certainly to VCs? Yeah. VCs should be scared. I think the problem, again, in that market is that there's just so much fraud, and it really needs to be cleaned up. But you are right. Yes. When it works well, when you have credible people with a credible idea, it's wonderful. It creates something like Ethereum. Ethereum was created without West Coast VCs, which is amazing, right? A $20, $30 billion project that VCs had absolutely nothing to do with.
Right. And to be clear, there are ways that you look at, companies, and Overstock.com did something, they are creating not necessarily ICOs, but they're creating pre-sales and, sale of, it's what are called SAFs, and that they're SEC compliant. So you're already seeing some of this activity. This is not necessarily just out in the future. The issue is that I think that it's going to become more and more prevalent as it becomes clear that companies may be better off doing this than going the traditional route.
Maybe if the SEC doesn't make it as burdensome as doing a traditional equity offering, which, if it's the same cost to do a digital token offering as to doing an equity offering, people are going to do equity offerings.
Yeah.
I mean, the SEC is just making it so difficult, so onerous, and really just not giving very good guidance. That what's happening is that a lot of projects, a lot of good projects, are just saying, you know what, to hell with the United States. We're moving everything offshore to an area that's more conducive to doing business.
Right. And that's an interesting point that you bring up, because I know you've talked a little bit about this to the extent that, you've got guys like Jamie Dimon from, the Chase CEO calling Bitcoin a fraud. The next day that you get a bunch of the JP Morgan guys buying up cryptocurrency as it crashes. Warren Buffett and Charlie Munger calling it rat poison. I don't know what their idea is. They don't like gold either, by the way. Even the Wolf of Wall Street added his 2 cents recently, which I don't.
Let me just get on my soapbox about this. This guy is a convicted criminal.
Right.
He stole hundreds of millions of dollars from retirees all throughout the 90s, and he's on CNBC, and we're supposed to respect his opinion. I don't get it. What kind of world are we living in where Jordan Belfort gets a platform?
I know. And that just cracks me up because, it's just one more person who's adding their, 2 cents and really doesn't understand this. But I will say that I do think that the likes of Jamie Dimon and, some of the other banks, they do get it. And I do think that, there's something going on there, whether that is, and, whether that's understanding that this is a real threat to them, or trying to position themselves and knock these markets down until they can participate themselves. I mean, there's something going on there. Do you think? Do you agree with that? I mean, what?
Oh, without question. What's so funny is that the biggest, I travel around the world constantly talking to experts in the space, and what I am seeing across the board is major Wall Street players positioning themselves to get involved in crypto. So just recently, a few days ago, a news announcement came out from Business Insider saying that Goldman Sachs was going to pull their plans for a crypto trading desk. Well, I have spoken to a former exec over at Goldman that has seen their cryptocurrency milestones. And he said, Teeka, that's not true. And then, of course, it came out 2 days later that it wasn't true. Goldman came back and said, that's fake news. We've seen JP Morgan, which, again, last year called Bitcoin a fraud. And then, of course, he walked that back. Bloomberg recently came out and said JP Morgan's looking at providing cryptocurrency custody services for their clients. The Chase part of JP Morgan Chase is coming out with an ETF equivalent for Bitcoin for their clients. Northern Trust, which oversees $10.5 trillion, is going to be coming out with a crypto custody product. Bank of America has more blockchain patents than any other bank in the world. So the Intercontinental Exchange, which owns the New York Stock Exchange, is launching its own cryptocurrency exchange and custody platform in November. So all around the world, I am seeing major investment banks position themselves to participate in this market.
Yeah, no, it's interesting, and that it's funny you mentioned the Goldman thing too, because literally that was the part that I didn't understand. Is I was sitting there reading, and they said they're not doing a trading desk. Okay, so that's news. But then in the same article, and virtually every article, they said, but they are planning a custodian service.
Right.
To me, that's like, okay, so they're still obviously involved. They're still looking at this as making a lot of money off of Bitcoin. I mean, this is.
But the next day, their head of digital products said that news in Business Insider was fake news.
Right.
Yeah, we are going to have a cryptocurrency trading desk, and we're doing custody,
and we're planning on trying to design derivatives. Is the other thing that he said. So what's interesting to me is it seems to me like what the elephant in the room is, and you've discussed this, is that there is like, it's like the infrastructure is being laid, right? Right now you've got a bunch of dirt roads everywhere, and everybody understands that if we could build some highways, if we could build some infrastructure where you could put semis on there, etc., that's what we're all waiting for. But then the question is like, why is it taking so long? I mean, first of all, let me just two-part question. Why is it taking this time? And we have some custodians now. We have a Japanese custodian. We have, I think, a handful of others. There's a lot of money out there that is willing to get interested in getting in. It would seem to me that there should be some expansion of market capitalization. As of today, it's about $200 billion. What is it going to take to get to $2 trillion? Because that seems like a fairly realistic number in the next couple of years.
It's going to take time. Remember, let me put this in perspective. So the S&P 500 is the most well-known index in the world. And yet, as well-known as it is, it took the SEC 7 years to approve the very first ETF. 7 years, Buck.
Yeah.
On the goddamn S&P 500.
Yeah,
okay?
Right.
This wasn't some esoteric offshore index. It was the S&P 500. Right. So in my estimation, I'm actually seeing these banks and government agencies move at the equivalent of lightning speed.
Okay.
I mean, think about it. Northern Trust is mucking about with cryptocurrency.
Yeah.
2 years ago, when I first started writing about cryptocurrency, I would get hate mail saying, "Oh my goodness, Teeka, I'm going to cancel my subscription because I can't believe you're getting involved in this Bitcoin, which is only used by terrorists and drug users. I'm so disappointed in you." Do you know how many emails I used to get like that?
No.
Right? And people were getting their bank accounts shut if they were opening up an account with Coinbase because, oh my God, they're messing around with Bitcoin. So we've gone from that to Northern Trust, JP Morgan Chase, Nomura Securities, Bank of America, Goldman Sachs, ICE, actively coming out publicly saying, you know what? We're going to get in and get involved in Bitcoin. Right. Oh my good Lord. In 2 years.
Okay.
2 years.
This is where the perspective comes in, right? I'm not a Wall Street guy. You are. So you're looking at this and saying, oh no, this is very, very fast, right? So last time I talked to you, and this was just a few months back, we were looking at all the things that are going on. We had a bunch of ETFs that got rejected. Of course, we had the Winklevoss ETFs rejected. We got a big one coming up, and by the time this plays, maybe that decision will already be made or punted. It's with the Chicago Board of Options Exchange. Why is that significant? And do you think, given where we are right now, do you expect this thing? Maybe you could describe it and whether you expect it to happen now, or what I'm thinking is they punt it until February and they wait for some more of these developments with ICE and BACT and all that. So
okay, so makes the CBOE ETF application special is that unlike any other ETF application, it's actually being backed by an exchange. They're getting behind it. They're changing their rules in order to support it. They provided insurance for the product, which has never existed before. So if coins are lost or there's fraud or the private keys are lost, everybody gets made whole, which is absolutely huge. Now, does it get approved in September? What I've said is that the SEC can push this out at the latest to the end of Q1 of next year.
February, right? I think it's like February 19th or 20th.
January, February, March. Yeah, which is right. Okay. The latest information I had was March.
Okay.
Was Q1. But they can punt it as late as that.
Right.
So I don't have a crystal ball. I can't tell you if it's going to happen in September or December, February, but somewhere in that time frame, I believe that ETF will get approved. And if I'm right, it's incredibly bullish for the entire space. Why is it incredibly bullish? Right now, it's a bit of a pain in the neck to buy Bitcoin and move Bitcoin around. It's not easy. There's a learning curve that you have to go through. Once we have a Bitcoin ETF, buying Bitcoin will be as easy as firing up your Fidelity trade station, logging in and hitting the buy button. So it's going to make buying Bitcoin much easier and available to hundreds of millions of people. So whenever you make something easier to buy and you open it up to a much broader audience, demand automatically goes up. So the best parallel I can draw to that is back in 2003 with Apple Computer. They had come out with this revolutionary music player called the iPod. And the iPod was wildly successful, but it was wildly successful in a very small market because it only worked on Apple computers. And there were, Apple computer market share at that time was 3%. You had 97% of the rest of the market, hundreds of millions of users that were PC users. So when Apple finally opened up their ecosystem from just Apple users to PC users, what happened? Sales exploded and the price of Apple stock exploded. So you're going to see the same thing, in my opinion, take place with Bitcoin. And it's going to be a twofold increase in users. One will be driven by ETFs, and the other will be driven by institutions that will have now these highways that they can ride their semis down in order to get involved. So again, think about it just like Apple, going from a very small ecosystem to a very large ecosystem. You are naturally, just based on the law of averages, going to have an order of magnitude more users come into the space.
Yeah, and just, for perspective, for people, again, who are not Wall Street people, I'm certainly not, but I've tried to get myself to my learning of blockchain and cryptocurrencies. I'm just trying to understand where we are here. And in the last few weeks, we've had Apple and Amazon both become $1 trillion companies. The entire cryptocurrency market capitalization right now is about 200 billion. And so if you think about just two companies, each one of those companies is 5 times the market capitalization of all of cryptocurrency. How big can this get?
Trillions and trillions and trillions. It is very, very early days. When I talk to people about that, they look at me like I'm crazy. But think about this. When Microsoft had a $500 million market cap when it went public, and you said, oh yeah, this thing's going to have a $750, $800 billion market cap, people would have looked at you like you were nuts because there was no personal computer market in the 80s.
Right.
It didn't exist. It barely existed. There was no need for disk operating system software. There was no need for these different types of programs. The demand was tiny. The installed user base was tiny. So I look at this, where we are right now in crypto, as a similar type of opportunity. Yes, the market right now is tiny. The amount of global users in the space is tiny, but I believe we are going to experience massive, massive, massive growth. And that's why I've devoted all of my professional attention to kind of spreading the word on cryptocurrency. And let me be very clear here. Cryptocurrency is wildly volatile. And it's incumbent upon yourself to be responsible with how much money you put into cryptocurrency. Don't put anything more into a cryptocurrency than you're willing to lose. It's critically important.
Yeah. And I mean, I think there's, it's funny that you say that, particularly when I think of Bitcoin right now. I don't see Bitcoin as big a risk as some of the other things that you can put your money in. I mean, believe me, I'm not saying it's not volatile, of course, but if you think about in terms of over the course of the next 2 to 3 years, right now, Bitcoin is trading between 6,200 and 6,400 right now. I mean, it's in my view, a very good buy. What are the chances of Bitcoin not being higher in 2 to 3 years from now? To me, just based on what I've learned, it's not very high. And so I always tell people, like, to me, it's like, okay, well, you are playing with something new, and some of the big risks here are just losing your money because it's a new digital thing, and and if you're not really savvy with your wallets, et cetera, you might end up just losing your money. But Bitcoin itself, in my view, is not going anywhere, particularly for the next few years. And I would say, if you're not worried, if you don't need that money today, it's still something that you ought to potentially look at grabbing. Teeka, you're so passionate about this, and I think it's and it's very contagious. It's certainly one of the things that's really driven me towards going from meeting you a couple of years ago and just talking about how I was playing with this, and then now it's like something I think about and talk about all the time. For the everyday person with your Wall Street background, have you ever seen an investment opportunity like this?
No. The last time that was anything even close was in the late 80s and early 90s. Because the tech space was so new back then and so misunderstood because there weren't too many experts in it, incredible valuation anomalies existed. So you could buy into tech companies that had enormous promise that would go on to create amazing value. So for instance, in 1991, you could buy shares of Oracle at a split adjusted cost basis of 12.5 cents. It went to 40 by the end of the decade. Now, back then, you could take a small grub stake, $1,000, $2,000, and literally become a millionaire by the end of the decade. That opportunity does not exist in the stock market anymore because companies do not come to market with such low market caps anymore. When Microsoft came to market with a $500 million market cap. If a Microsoft-esque type of company came to market today, all the value would accrue in the private market, and it would come public at a $50 or $60 billion market cap. So the ability to make enormous amounts of money in the stock market from a very small amount of money is gone. It just doesn't exist anymore. And what I love about crypto is I'm seeing a lot of the same setups I saw in the late 80s and early 90s. This is new technology. Not many people understand it. And valuations are out of whack. Bitcoin is incredibly undervalued. Doesn't mean that it can't experience more volatility, but relative to its utility, if it didn't do anything more than what it does right now, Bitcoin is still worth an order of magnitude more than what it is right now. But the world doesn't understand that yet. The way they didn't understand how valuable Oracle was when it was at 12.5 cents in 1991 during that bear market. Actually dropped 85%. Okay, so the market can do crazy things. In 2008, you saw stocks like Bank of America go to $2.50. You saw American Express go to $10. You saw Harley Davidson go to $8. In a bear market, crazy things happen. Bitcoin at $6,000 is one of those crazy things. Ethereum sub $200 is one of those crazy things.
Yeah.
Yeah.
I mean, that's below a year ago. I mean, I think I
almost. Yeah. A year ago in July, it was like $1.70, $1.50, $1.60. Yeah. Ethereum's been really beat up. And just to comment on that really quickly, a lot of that has to do with EOS. EOS is another project that raised an enormous amount of money in Ethereum, and they've just been hammering the bid on Ethereum, selling a ton of Ethereum and moving into other cryptocurrency.
Right. Well, Teeka, I know you're a busy guy, and I could talk to you for hours, but I know you probably have a few other things you need to do today. So I appreciate what you do, and I don't know anyone who works harder than you at getting it right. So I do appreciate you coming on. Teeka Tiwari, everyone. He is the editor of Palm Beach Confidential. Check it out. Teeka, thanks again for being on.
Thanks so much, Buck. Appreciate it.
I'll be right back. Want to buy Bitcoin with your IRA? Don't waste your time on expensive IRA custodians. A strategy called a QRP is as easy as writing a check. Find out how. Text 44222 and type QRP book. That's one word. And get a free book that explains everything. Again, that's 44222 QRP book. One word. It's the easiest way to make Bitcoin and other cryptocurrencies part of your retirement. Welcome back, everybody. So we already did the Q&A section in the first week's show here in the first episode. We don't normally cut these shows in half, but this was such a long show that we did that for your listening pleasure, trying to time it with all your commutes, etc. But I do want to remind you that I want to hear from you. I want to get a bunch of questions from you because we're all trying to learn together here, and the best way to do it is to ask questions. And so make sure to go ahead and go to consensusnetwork.io and preferably use the voicemail function. And the voicemail function will basically allow you to ask questions. We'll play it on the show. I will answer it in real time using that methodology. Or if you're shy, you can also just, you can basically write a question, submit it via the website against consensusnetwork.io, or you can just email at email me at info@consensusnetwork.io, and we will get your questions answered. Again, that's a huge part of this show, right, is getting everybody involved, getting this whole thing together, and trying to learn together, because I'm not an expert. A lot of my guests are not experts. We're just trying to create this knowledge base for all of us together. And with that, I will leave you. This is Buck Joffrey for Consensus Network, signing off.